I'm going to go to Arvind now, because like Joseph outlined, an organization has to put in place a plan to be more sustainable. But sustainability reporting is important, because how are we able to measure their impact? How are we able to measure that what they're doing is right? So Arvind, sustainability reporting is relatively a new process, and we know that. And corporates and SMEs should now start to actually measure what matters. But how is this different from regular reporting? Because I'm assuming there's a lot more that goes into this kind of a report. And how can it drive change for the business and the environment?
Thank you, Fatima. Thank you, Joseph and Hamad, to introduce everyone on ESG reporting and sustainability, what it is. Interestingly enough, Fatima, if you see, this is not a new concept. ESG reporting has been there for more than 20 years, I believe. And HSBC and KFH has been doing it for a long time now, I think more than 10 years at least. So this has been in the radar of CFOs and financiers all the time. Recently and consciously, this has come up more into focus because of a mandate from governments. After signing up the climate change policies, they want to mandate a lot of companies to disclose and be more transparent. And therefore you see this more. Mm-hmm. Because of sustainability reporting mandate, the key risk areas have been converted to critical risk areas sort of thing. So if I say in layman terms, so you're a layman who doesn't know about sustainable reporting, for example, Fatima. So it's about reporting non-financial KPIs. Mm-hmm. We have all heard about revenue growth. We have heard about ratios. We have heard about profit growth, total assets of a bank, of a company, but we've never heard more about non-financial KPIs, which talks about what's your contribution to the economy, to the environment, to socially, how are you contributing to the economy. If I talk about finance professionals, we have always talked about goodwill and brand value. That's one thing. It's a non-financial KPI where we put a number to it.
Okay.
But what does this relate to? I mean, what does goodwill relate to? Goodwill, brand value, it's reputation risk. That's a critical risk area for us as a corporate, as a bank, or any other company. The financial performance does impact our reputation risk big time, never been measured till now. But ESG risk also do impact reputation risk. And banks are the core of the system, right? Where they can actually drive a lot of behavior. They fund everybody, so they can do a lot of things. Talking about how is it different from regular reporting, we did speak about all ratios and financial performances. This is non-financial KPIs, where I talk about how these prominent risks are, first of all, captured, then monitored, measured, and how do they manage it, the corporates. You have heard about SDGs. We have all seen the 17 goals. These are non-financial KPIs. How do you blend it into your company? How do you report them? See, sustainability reporting is a balanced presentation of the company. Your positive contributions and your negative contributions. This gives a chance to stakeholders and investors to form an opinion about the company and take informed decisions. Should I invest in this company? Are they doing enough for the environment? Socially, are they responsible? Are they governed properly? Are they working towards their sustainable goals? It's very, very important. Talking about one of the biggest issues is the climate risk, right? If you see the World Economic Forum, they have highlighted 4 of the 7 risks as climate risk. And therefore, investors are very keen to understand how do corporates and banks address these climate exposures to the company. And only then they can go ahead and invest. So that's the difference between your regular reporting and this reporting. This is a much wider concept. It's ahead of the numbers. How do you get the true value of the company? Value is profit. How do you make it true value?
Thank you so much, Arvind. I think definitely sustainability is much harder than the regular reporting, because you can always plug in the numbers. There's a standard for that. But with sustainability, I feel like every company also depends on their plan, depends on how they report it, and what are the values and what are the initiatives that they want to also contribute to. So I think it's. Can I ask you just quickly? Is it a tailored report depending on each company?
Depending on each company, yes.
Okay.
So there are standards on basis on which you report, but you can tailor it as per the company. For a manufacturing company, the parameters will be different. The critical risk areas will be different, and for a bank, it will be different. So it depends what the company is. Yeah.
Awesome. Sustainability reporting standards for businesses are necessary, like you mentioned. And
Yeah.
I believe the European Union launched a sustainable reporting directive in April, and their aim was to also revise and strengthen the existing rules and kind of have sustainable reporting kind of be on par with financial
Yeah.
reporting as well. And we'll dig into that a little bit deeper.